Okay, where's the microphone? Here we are. Good evening, folks. Tuesday evening, 23rd of May. Just gone 6 o'clock for the London market wrap. Just a quick market wrap this evening, just to have a look at what's been going on. In terms of the last hour or so, we've seen a bid ignite itself under the US dollar finally. Seeing some strength in the US dollar, which I'm not totally sure why this has been so well bid in the last hour or so. I haven't seen anything significant to move it up to these levels, other than well, I haven't seen anything. So that's where we are at the moment, and this of course is not quite into our level of resistance that I've been penciling in for a while, which takes us back up to the 97.30 to the 97.50 area. So I think this is where we could possibly struggle for a continuation to the upside. So I'm not convinced by the dollar rally at the moment. I would need to see it break above here and sustain levels above 97.50 before I even start thinking about levels back up to the Trump candle 98.50, which is 100 points higher than here at the moment. Remember, the Trump candle support was at 98.60 in fact on the way down, so that level is going to be heavily resisted on the way up, I would have thought. So we've just put out to the daily. It's basically up at here, the Trump candle. Remember, we've had this on our charts for donkey's years. Yeah, so this is basically where we are looking to hold it if it does. But I don't say I want to see it break above the 97.50 area before I even start thinking about this next target to the downside. This does create a potential opportunity in dollar yen and a potential opportunity in euro dollar. I just want to quickly touch on those before I analyse my own open trades, and then a quick look at the trade ideas, and then we'll call it a wrap. Okay, so dollar yen. Okay, so here's the dollar yen. Let's put it down to the 4 hour. This is the consolidation phase that we've been in now for basically 3 trading days. It's been meandering around its moving averages, and this is the spike through you've seen in here at the moment. It is this is potentially a selling opportunity as far as I can see in the US dollar at the moment. I'm certainly not going to be getting a long dollar against the yen at this moment in time. My sell zone, which I've had in for a while, still takes us up to the 12 handle. Now, if you were to sell, if you were to be a range trader and believe that we're just going to be in this range for a while, then you might want to take advantage of this Mazubu candle, which is a strong momentum candle with a little wick. It's got a bit of a wick, so it's not technically a Mazubu candle, but it's still a strong momentum candle nonetheless. It's taken out. If you look at the average range of this, it's basically been down at around 19, and this candle alone has basically put on like a 3 times its average true range in one candle. So this could be considered to be an overreaction, unless someone can tell me something in the chat that I've missed something along the wires. Then this is nothing short of just some stop hunting and some maybe a large position came in out of the markets. I'm not even seeing that from the big banks, to be honest. And it's selling into these levels. I mean, if you would sell in here now, any stops above 60 pip stop. Okay, you're going to be wrong if you start breaking up through 12.30, and that should be a logical place to put the stop. So if you want to try and test this, for it to retest the lows, remember Trump's away at the moment, so that's why maybe the markets have taken a bit of a breather. He's on holiday in not on holiday. Maybe he's on holiday. He's on business trip around Middle East. He's now just touched down in Rome, so he's seeing all the religious leaders, of course. Once he gets back into the White House next week, you can see it's business as usual. In which case, the markets become under pressure. Of course, we've had some Fed speakers over the last couple of days. Maybe. No, not seeing any Fed speakers on the wires in the last couple of hours. No, nothing at all. So we've had a few Fed speakers were basically just reiterating the fact that we're still on course for two more rate hikes this year. I think the market was getting concerned about that. The June hike moved from 60% up to 90%, then back down to 60% now, up at 75% again for the June hike, and of course the hike in September, the next penciled in hike on the that's now looking less likely at 60%. But I think Jason mentioned a couple of weeks ago that if you see something at 60% in these projections, then it's pretty much the same as being 90%. In other words, it's going to happen. But so we'll have to see on that. But at the moment, we are looking at this dollar strength as possibly a temporary blip and to be sold into it. So the other idea that I'm looking at is the continued strength of the euro. Now, I am long euro against the Aussie and against the yen. So I'm not taking this trade myself at the moment. I have my maximum exposure that I have with the euro. And remember, I don't always just trade one pair. I trade maybe up to 4 or 5 pairs at one time, but I never want to have more exposure in one currency or correlated currency than I feel than my risk appetite is set out for in my trading plan. But anyway, so the euro dollar is this was my first level of buy zone, which we were talking about this morning, and the lunchtime review as well. Remember, I stream 3 times a day now for those from different time zones around the world, and this dollar rally has just basically seen this buy zone taken out. Now, I'm not long. It was the aggressive buy. Still don't necessarily think it's a bad buy. We're coming closely into the second buy, which I would feel much more comfortable about, and that is coming into the 1160 area. So it's only 1.5 ATRs away. The ATR down here, if you look here, is 23. 1.5 times 23 is 34. So 34 pips away. We're basically less than that. We're now only 30 pips away from the more comfortable buy zone of the euro dollar. So I still think this is a trade on. Euro numbers came out today. They were reasonable numbers. I mean, there were a couple of numbers missed in German. Missed it small, but we're still well above. These are PMIs, and anything above 50 is looking is expansionary, and the numbers came in. They weren't. They were still reasonably solid numbers. I mean, the flash manufacturing PMI, the Europe PMI came in at 57. The flash services came in just marginally lower than expectations, still at 56. It's still very expansionary. Remember, anything above 50 is expansionary. Anything below 50 is contracting. The German IFO business climate, that came in 114.6. So these are strong numbers coming out of Europe. But what you're seeing, certainly in the eurozone at the moment, it's had as we say in England, a jolly good rally, and this jolly good rally, it's these pullbacks, setbacks, are healthy in the formation of longer term trends. Remember, we're still very much talking about tapering. When were they going to start talking about that? The normalisation of rates in Europe. But this is a good rally, and it is due a correction, and that's what we're seeing at the moment in the euro. But that doesn't mean you want to start reversing, and looking this, talking this back down to the 110 level. I don't think that's necessarily on the cards at the moment. I'd much more inclined to believe that after this setback and profit taking, possibly down at 1160 area. If that's wrong, then you could look to get back in at at the 1100 area. But bias certainly still continues to me to be the upside in the euro. So looking at the euro dollar there. Just while I'm on the euro, I also want to look at the euro pound. Now, the pound has been reasonably resilient in the wake of the horrendous atrocities that happened in Manchester overnight. So heart goes out to everyone involved in that, and let's just hope there's no knock-on effects around the rest of the UK and indeed the world. It's just absolutely horrendous, and but the pound has been reasonably resilient. I mean, the pound has been normally you'd see currencies under pressure in this, but the pound has been resilient under this, although we've just had it's had a move back down now with the euro But if you look at what's happening to pound against the cable, I mean, we had we had a sort of like a actually, let's just pull up this. I want to talk about the pound. I'll come back to the euro pound in a second. I just want to look at the what happened in the pound against the dollar. Just coming into the London close, pound dollar basically had a big surge on the back of all I've heard from the wires that I read, and the bank forum that I'm on. Was basically fixing into the London close, and because of the awful events overnight, there's been less liquidity in the British pound, and that's why this fixing coming into the London close took out some stops, which basically saw this move up 50-60 points on the back of nothing. And of course, this is a massive doji in the end with a big range. Basically, the markets really pushed it back through. So once we got above the 130 level, up to 130.34, some big sell orders hit that as well. So so the market, the British, so the pound doesn't like, it's reasonably resilient, but certainly any strength above 130 is met with heavy resistance, which is why I think the resilience of the British pound in terms of pound against the euro is also going to be possibly restricted. So this is another reason why potentially you might look to get back into a long euro pound, taking advantage of this. So now this was the initial buy zone. It's a thin blue line, so it's more of an aggressive one, coming into a much more substantial entry level in pound, euro pound, takes us in at the 86.10 level. Okay, which is again not too far away from here at the moment. This is the 1 hour chart. ATR on the 1 hour is 13 pips, so we are basically just a little bit more than 1 ATRs away from here at the moment. So, but if you look here, this is a key level back from the 17th of May. Each of these spacings is a day, basically on the hourly chart. So these are days. So we held it here 86.10, a dozen times almost, I would have thought. Big resistance on the way up. This inverted hammer candle here, a bit spiked through, came back down, and then took almost a day to get back up to those levels where it was resisted and hung around for a while before it shot up to its new levels and tested the approached the 87 level, where it certainly found some sellers coming in. So we're basically looking to retest the 86 level. I can't imagine that this won't hold it on the way down. So that is a potential buy for me in what still is a long-term uptrend. This is the 1 hour, and if you look at the 4 hour, it's basically been coming up now since the lows back in beginning of the month, 10th of 2 weeks ago. I'm just I didn't mean to mention this, but I'm just looking here. You've got these fib levels. Of course, this is the wrong way around, but this level here, I mean, I don't know if I remember. I don't know if I got onto this trade at all at any time. But look at this level where we did pull back. 85.28 structure to the left, and a fib level. It's not a 61. It's a 23. It's the other way around. But key technical level. So this is why I like trading technicals. I mean, anyway, it gets me off track a little bit. So euro pound, looking to buy euro pound on any further pullback into 86. Now I do still have a synthetic long euro pound with my open trades here at the moment. I just want to go through those. Put a trade idea out an hour ago, a few hours ago, and it was on the Aussie yen. Let's just look at the meter to see how that's pairing up. Okay, so we're long Aussie yen. So this is the Aussie here, this is the 1 hour chart. Aussie is the second strongest currency at the moment, and the yen is the weakest currency. This is on the 1 hour chart at the moment. If you take it out to the 4 hour chart, Aussie is still it's been grinding higher and pretty much a nice almost flat line moving up, and the yen moving down. So this is quite a stable pair to be trading. So my long trade is on the on my trade idea. If you will look at it in a moment when we put up the trade ideas, but long Aussie yen. Okay, so we're just slightly onside here at the moment. Nothing too spectacular. We've been offside, and in fact, I know people were following the trade idea, and it doesn't matter who it was, but we had I had a couple of private messages coming through to me on the site here. We're panicking, saying, you know, should we bail out? Should we bail out of the Aussie yen as we started to move? Because I placed the order about here, in fact, and then you know, we had a temporary. In fact, it was about here. We moved up into profit, looking at a nice gain, and then we started pulling back down into negative territory. And one of the guys in the chat, doesn't matter who it was talking about, should we cut now? Should we cut out? It looks like it's all wrong. It's, you know, it's time to change track. You know, and my argument was, well, you know, we did the analysis at the time. We put our stop in place. We took our put our stop loss in place. We put our take profit target in place. What am I going to get worried about? Wasn't even looking at it, quite frankly. You know, so I just, you know, so once you've got your stop in place, this is why someone was saying the other day, no, yes, one of the trade ideas, no stops in place. Well, you know, because I've got the stop in place, I know my risk. You know, I knew my analysis was right at the time. You know, whether it works out or it doesn't work out, that's, you know, I'm indifferent. You know, so what? I mean, I'm looking at if I do, I'm trying to think how many trades I do a year. I mean, if I do, you know, 500 trades in a year, what's this trade? Is it important, this trade? No, it's not. 20, yeah, about, you know, something like that. Anyway, so I mean, we're back in profit now and heading in that right direction. Now, I'm not advocating you do that, but as far as I'm concerned, that this trade idea is still valid. So if you want to get back into Aussie yen, you know, I still like my entry. You know, I've got no problems with my entry level. We are slightly in profit at the moment, but if it was to pull back into my entry level, which is only, you know, 10 pips away now, you know, I still like it. So I'm keen to keep in that Aussie yen trade for now. Okay, let's just have a look at the pound yen. Pound yen. Now I'm short pound yen. Now, of course, the pound rally that we've seen in the last couple of hours ago has moved this into negative territory. Yeah, but I'm not convinced myself why I want to start changing direction of this at the moment. I don't get married to trades. You know, you know that saying, how the saying in markets, you know, the trend is your friend to the bend at the end. You know, and at the bend at the end, it normally costs me some money, and I've got no problems with that. You know, the bend at the end is when the trend reverses and moves into a trend in the other direction, and I know, you know, chances are I'm going to get caught out somewhere when that does indeed happen. And this could be the trend, the bend at the end. I don't know. At the moment, I'm in the trade. If it costs me, it costs me. Not worried about it. You know, I'll continue trading the trends as long as, well, that's all I've ever done. So I'll continue to do that. And my stop loss is in place. My take profits in place. We'll see which one is going to be hit. If we take out my stop loss, then I'll relook at this. You know, then possibly we could be in a pound yen uptrend for the continuation of this trend on a longer time frame. Okay, but at the moment, you know, I'm still happy to play pound yen to the downside until the markets tell me it's time to shift gears on that. You know, as I said a moment ago, you know, pound, it comes into big resistance above 130. You know, you've got to look at the major. You know, if you think US dollar is 88% of one side of all foreign exchange transactions, so you can assume that the pound dollar is the most actively traded pound pair out there. And the pound dollar is very close to where we have significant sellers in the market above 130, up to 131. So any pound strength is going to have a knock-on effect, I think, a knock-on effect on all the pound crosses. So that's another reason why I quite like the pound yen to the, well, my bias is still pound yen to the downside. Right, let's have a look. What am I? I'm also short pound yen. I am long Aussie yen. We've spoken about Euro Oz. I'm also long the Euro Oz, which I think is that's just moved into negative as well. I've been long this for a while. Again, of course, we've had. Let's take these distracting fibs off the chart. So I am still long Euro Oz. I've had some. We've been in positive territory for a while. Now dipping into negative territory. Again, no real problem with this. Got my stop loss in place. If it hits, it hits. And bias, still is for continuation of the euro strength at some point. It's not just being married to the euro strength. It's just basically what I'm seeing on the charts. It's still in a longer term uptrend. This is the 4-hour chart as well. Okay, so that's my my sort of a London wrap on what we're doing at the moment. Okay, so the greenback, the dollar, having a move to the upside, not wholly convinced by it. We'll have to see if that is indeed a change in trend. Personally think that it is unlikely. And dollar yen stalling here. Okay, just actually before I do wrap up, I want to just talk about the Canadian dollar. Now, of course, we've got the OPEC meeting on Thursday, and all the leaks are coming out now. The Algerian minister is talking as well. I heard him talking earlier. I heard him talking earlier about possibly extending the production cuts, or it's not off the table to extend production cuts, for the whole of 2018, which basically signifies an 18-month extension as opposed to a 9-month extension. So the oil market continues to be buoyant on the back of this. I don't know whether it's going to be buy the rumour, sell the fact in the oil markets. It's been very, very resilient. Let's look at the daily. This is the big move we had in the daily in oil from 53.70 down to 43.70. So that's like a 22% move just off my head. 22% move. Yep. We pulled back, pushed through the 50% retracement. Now pushing through the 61 retracement, and it's heading back up to possibly 53.70. So this is the level, of course, where we'll be looking at to target on Thursday if there's any big surprises out of OPEC. At the moment, 9-month extension is in the market, and the Canadian dollar has been following it up as well. So keep an eye on the Canadian dollar. My trade this morning from live stream, and most of you, if you're in the US, I thought you were asleep. If you're not asleep, you should have been asleep. It's about 3 in the morning for you. But we were looking at the CAD dollar. Okay, and we had an entry in here at 35.06 on this candle here. And bear with me a moment, please. Okay. Right, sorry I missed that call. So on this candle here, we missed the entry by a few pips, and we rolled literally, almost rolled back over within 2 hours. We were sort of like, would have been at take profit target, 50 pips on side, but obviously we missed the trade. Now back up into here now. So dollar yen, this is back up here. Sorry, dollar yen, dollar CAD is back up here on the back of the blip we've had in the US dollar, which I have yet to have it confirmed to me why this is basically happening, and the fundamentals why this is happening. It's all, I don't know, technicals, but we're coming back into a sell zone in dollar CAD as far as I can see. So shorting dollar CAD here at the moment is a potential trade setup happening in front of our very, very eyes. Shorting dollar CAD at 135.05. In fact, maybe you just missed that sell entry, but this candle pierced it. If you are taking a short from these levels. Then stops above, you mostly don't need a 50 pip stop. You can be wrong on this trade, quite happily be wrong on this trade with a 35 pip stop, forget about it. Take it to the downside, 60 pip to the downside for continuation of the CAD strength against the US dollar. So good risk reward trade, nice and tight stops, take profit targets, intraday trade for a rollover for continuation of the longer term downtrend, taking advantage of this move. It's coming nicely back into this level. This is the 4 hour, which is obviously where I've got my soul zone in there. So keep an eye on that as well. Okay, let's have a quick look, see if any trade ideas have come out. Not very many, so we'll leave the trade ideas. It's only just one trade idea, and of course my trade idea in the Aussie yen. So a bit sparse on trade ideas this afternoon, guys. A bit of apathy possibly. So keep the trade ideas coming. What's my view on New Zealand US dollar? That's the weekly. That's the daily. For 1 hour. Well, bias is to the upside. Okay, I'm not in it. If I were to get into it, look for a pullback of this move here. So I think you can get in. Well, let's say bias to the upside. If you look at the move from the low to the high, it's 160 points. So take an 80 pip pullback, takes you an entry in here. So that's a 50 pip pullback, 50% pullback, takes you in there, and that's the 69.60. If you want to be ultra conservative, then get back in at this previous level of old resistance, which is now going to possibly prove support. It's taken a day, half of yesterday, well, taking basically a day to get back up here. Pull back down here is not unlikely. As you know, my general view, I'm not convinced by the US dollar rally at the moment, so my bias to this would be to the upside. All right, guys, I'll leave it there. As always, this is so this is the London wrap. The next stream will be in the morning, UK time, which takes us for a few hours from now. Now Jason is on later. Just checking here. Jason is on at his usual time, which will be in 6, 8, 7.5 hours time. Jason streams the Asian session as well and puts out some trade ideas if he finds anything pertinent. So I'll leave you there, guys. Safe trading into the close of US and into the start of Asia. If I don't speak to you before, have a good day and speak to you soon. Good luck.